Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. I hope you guys are having a great day, whatever day it is for you. It is always Friday here on the podcast, so we're bringing that Friday energy to you. It is we're into February now. So January has passed. We are well into the year, and I'm feeling good. We moved into our new house, and we have gotten most of the projects done. I know you guys have been kind of on the ride with me on this, but we're almost done, and so we're feeling good. It's a good day for a second reason, though, because we got Sam Morris with us on the podcast from Sunset Capital. Sam has over 23 years of experience in real estate. He's been part of over $1 billion in real estate transactions. The man has experience. He focuses on multifamily and my favorite, self-storage. So this should be a good episode. Sam, thanks for hopping on the show.
Yeah, Gabe, man, thanks for having me. Excited to be here today.
Absolutely. I told you before we got on here, we always like starting with stories to hear how people got started. So why don't you take us to the beginning of your story in real estate and tell us how you got here?
Yeah, so by way of education, I'm actually an ex-corporate banker, right? And so I actually started in the banking world, which is really kind of a unique aspect. I learned later in life, wow, this is kind of unique. Not many people did it this way because I was a grunt in banking. And really what that means is I started out just underwriting deals all day, every day for years.
Nice.
So I always joke because people talk about, you got to have 10,000 hours to master a skill. And if that's the case, I mastered underwriting probably by the time I was about 23 or 24 years old, because all I did for years was just underwrite deals, and all kinds of deals too, not just real estate, but all different types of real estate as well. And so I had a great understanding of the quantitative side of pretty much everything and anything real estate. And so I watched for years how a lot of these, guys who were doing these real estate deals, how they actually made their money. And I literally got to watch from the sidelines, really being the part of the largest person in the deal, because we were the lender, right? And we lent typically more than 50% of the deal. So we were well informed of what they were doing, how they were doing it, and got to see it really firsthand, right? And go out to the projects and see what they were doing. And so I learned at a really young age, wow, this is something that's pretty spectacular. And I'm seeing the balance sheets personally of these guys and how they're making it, what they're making, and going, wow, this is interesting. And so at a young age in my 20s, so I started investing in some of these larger projects too that I was able to find locally in our area. And so I started in the multifamily realm back in 2007, investing what I had into whatever deals we could find, knowing, all right, I want to know who the sponsor is, what types of deals they are, and knowing how to underwrite the deals and feeling pretty confident about it. So I started as a passive investor, not unlike the bulk of other investors that we have at Sunset Capital.
Very cool.
And that's how I actually got my start in real estate.
A lot of times when I have guests on the show, I always we talk about like how people get started in real estate, and I always think like I got started. I was in corporate, I was in consulting, and it had nothing to do with real estate. And I knew I wanted to get here, but it took me a while because I had no way of making money while I was kind of ramping up into real estate. And so I always wonder, like, what's the best way for my younger self? What are some jobs that you can get in the realm of real estate to get your foot in, and then get the experience, and then start to build your portfolio? Being an underwriter, that sounds like one of the best ways, because you get intimate knowledge of these deals, how they run, and whether you get to understand what makes a deal, an actual deal that you should be investing in before you actually put pen to paper. So,
well, believe it or not,
awesome.
You're exposed to everything too, right? So what certain things cost, what insurance looks like, what taxes look like. You literally start learning all the other ancillary aspects of what it takes to, from a quantitative perspective specifically, what it takes to actually run and operate and be profitable with these properties.
And was
So
this was it a local credit union, or was it a larger
it was a community bank. So I started
Oh, wow.
and
That's
so
awesome.
and so kind of fast forward, really hard to get that out, right? I became a lender and I started lending on all these things and really getting intricately involved in it. And even to today, I sit on the board of a bank, right? And so I still have access to a lot of those resources, um, financial and educational, that we still utilize today at Sunset Capital. And so, yeah, it's great. I mean, I get to sit on the loan committee at our bank, right? So the deals that are happening in our local markets, I still get to see and get the knowledge of exactly what's being paid for that property, how they're going to run it, what they're going to be doing. And so I still get to continue to grow in that education even today because I think it's invaluable.
Yeah. Well, and it gives you insight into what banks are looking for. I closed a mobile home park in, this is another one that in Pearsall in southeast or southwest San Antonio, a couple months ago. And I literally went to like, I can't remember, like 40 banks or something crazy, a ton of banks, and nobody wanted to lend on it. And so we did eventually get a lender, but understanding exactly how to present your deal to banks to make them see what you see is a skill that I didn't realize is a skill. It's not.
Yeah,
I didn't realize it's something that you should know how to do when you're trying to get debt on your properties.
well, it's kind of funny, right? Because one of the things I tell people is that, in the real estate world, we have our own vocabulary. We have the way we talk to one another, and we understand, our acronyms and whatever we're using, things of that nature. Well, the irony is, in the lending world, they have one too, and it's different. It's a very different way of speaking, and they have a different vocabulary. And so, obviously, being able to speak both of those languages, it's quite beneficial for our company. And when we're dealing with things, in particularly in this market right now, I mean, a lot of what people have talked to me about is distressed assets, right? And I said, yeah, but the way you approach a lender, um, with the distressed asset it's a very careful thing the way you got to do it, and having a good understanding of their balance sheet, because the balance sheet in the banking world is very different than all the rest of the companies that are out there, right? You almost got to like flip everything, because loans are assets and
Oh, right.
deposits are liabilities, and so it's a whole different world out there, and it's a heavily regulated industry, right?
Yeah.
So having that understanding of the pressures and the pain points that are going to be put on the lender, you go in telling them how you're going to alleviate those pressures and pain points versus, hey, let me just take this over, is an easier way to get them to work with you. And building those relationships over a period of time obviously can be quite beneficial, right? And so there are those levers and those pain points that you just have to be able to convey and articulate appropriately to the lender, and you can work out a lot of great deals that way. But the same goes for the way if you're asking for money and getting them to partner with you, and letting them know that, hey, this is a relationship, this is a partnership, this is what we want to do, and here are the things that we're going to do. This is what you can expect out of me, and being able to be transparent and communicate that way. It could literally take a no to, yeah, I think we can probably figure out a way to get this done because of the way that you guys operate.
Yep. It always goes back to relationships in real estate, especially long term. If you can get a deal done with a small bank, they're reticent at first, they're not sure. You show them what you see, you show them your vision, and they finally get on board. That next deal, once you perform on that property, on that deal, the next one after that will be infinitely more simple, more easy. They'll be willing to work with you because they've seen your performance. They see how you run deals, how well you communicate with them, that you're paying your loan on time. And so it just gets easier, and that's both on the capital side and the debt side. I'm just having, capital investors that once you give them a return on their money, they're going to be like, all right, you did it once, let's do this again.
That's right. That's right.
So I know you, capital raising is one of your strengths. I do want to get into that. Before we get there, let's finish up your story. You talked about in your 20s, you invested as passive in passive investments, because you were doing all these underwritings. You understood what the good sponsors were, who were in the market that were good sponsors, and you're investing in their projects. at what point did you jump and start to do your own projects?
Yeah, so I jumped actually kind of fairly early while I was still in banking to start doing asset management, right? And so what I would do then was I would go and asset manage the deals and bring the equity associated with it because of relationships that we had built up and over that time frame. And so I started doing that, I want to say in 2012. And so, it was a minute ago. And that's when we started doing kind of our own deals. And it was partnering with the right sponsors to be able to do that. And knowing that I could, work with it, and we're kind of on the same page. A lot of it is just communication. I mean, that alleviates a lot of future potential issues when you're able to do that. And so we started doing that, and it kind of just grew from there. And in 2018, I sold my last bank I was at, and then went full time into it. And so kind of been doing it ever since. So.
Nice, man. I love it. I'm sure you got started in multifamily. At what point did you start putting your toes into self-storage?
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com. So if you are interested, head on over there. With that said, let's get back to the podcast.
Yeah, self-storage was actually fairly soon after. I mean, we started doing, I think the first deal we did with there was in 19. And so as of today, we got a little over 2,000 units now that I'm the lead GP on. And, we absolutely love self-storage. It's a different type of operating than multifamily, but returns are somewhat similar, just, maybe a little bit different the way that we provide the returns. But it's actually been a great business for us to be in, and we have a great partnership with our property management group that we deal with there. And so, it's been a great run for us so far with that, and we can actually see more and more opportunities both on the self-storage side and the multifamily side. Really this year and on. I mean, we see a lot of opportunities. It's just we still have bid-ask spreads that are a little bit different than what we're wanting. So you just got to churn through a lot of deals to be able to find that one that really works for you.
Yeah. Even with interest rates still relatively high, everybody that comes on the show, they're very bullish on the next couple of years. They think it's bright horizons that that deals.
And I have I would say my thought, at least on interest rates, and I maybe have a little bit more of a unique pining to it, I guess, just because we get to talk to federal regulators, being on the board of a bank, and kind of have an understanding of what they're thinking too. It feels more that we're in a normal, I would call it normal interest rate market right now. And, this would be a time frame where you need to make your deal work for these types of interest rates and not really anticipate, a massive 4%. Decrease where we're at today or anything like that. But, that we're in a range that would probably be considered normal right now.
Yeah.
And this is really where deals need to be able to be working. So,
yeah. I bought my first commercial property in 2019. And so I've been doing this for 6 years now. And, 2019 to 2024, my normal, quote unquote, is 3 to 4% interest. And so I was talking with my dad about this, and he was telling me, like, when he bought his house I can't remember, in the 90s, interest rates were, double digits, and that 3 and 4% is not something you should ever expect to see again. It's not something normal. And it kind of puts it all into perspective that, 7% is not, it might be high, a little bit high, but it is near normal at what interest rate should be. So if you're waiting for interest rates to drop, that's just not the right strategy to go about.
You can go back. You go back even to the early 80s, right? Interest rates on homes were 18%. That's just, Yeah, I mean that wasn't, that was a time of high inflation, right? Um, but we also had wage growth that was tremendous as well. Now we're in a situation where, inflation has been coming down, and so is the wage growth associated with it, but the interest rates are still high from a comparative perspective. And so it truly means that there could be even a slower market until, we kind of get that normalization, and that just takes time. A lot of people will tell you that that the Fed's done just a terrible job handling all this, and you'll see all kinds of opinions associated with it. I mean, my opinion is they've actually done pretty well with what they've had. And so obviously we have a new administration that's now started, and things will change associated with that. And I mean, I think there's a lot of consensus that, it would be good for commercial real estate, whatever ends up occurring. But, there are going to be things that are good and things that are not so good. And, at a macro level, we just have to kind of be cognizant of what's going on and really control the things that are controllable for us.
Yeah. So where do you guys invest? Are you only invested in Texas, or do you invest nationally?
We're in the state of Texas. When it comes to storage, though, we will go outside the state. We just haven't found those opportunities just yet of what we really are wanting. But we do look at deals outside the state all the time. But for multifamily, we stay in the state of Texas. It's just, if we leave the state, I would tell you we have a knowledge gap, which is just, it's a fancy way of saying we don't know all the other markets, but we know the Texas, markets really well. And so we typically stay in our lane and want to invest in what we know. So,
yep. Yeah, absolutely. So let's go back to capital raising. It's one of the skills that is, it's difficult to master, but it is so important because, when you get started, you do your first couple of deals with your own cash, with maybe your family's cash, your uncles, your parents, your brothers and sisters. But then you get to a point where you're stuck because you don't have any more money. And so you need to go outside of your immediate circle to start raising capital from strangers. It's a scary jump. It's something that everybody, when you do it, it takes some balls, but once you get it done, it definitely does open doors. It opens opportunities and the different types of deals that you can do. So let's talk about syndications and about raising capital. What are the steps and the things that once you got through it, you realized are the kind of catalysts to allow you to raise for bigger deals?
Yeah. So there are a couple of things there. One, I would tell you is if you have an opportunity that's really is that great, right? Instead of please sir, can I have money? It's more of a, hey, I have something that's pretty valuable here. I'm willing to invite you to come and join us to be a part of this. And it's, I'm going to get the benefit from you joining us, but you're also going to get a large benefit from being a part of this too. And so, and that maybe is a little bit of a mindset shift from a standpoint of, oh man, I got to go out there and go beg and plead and get all this money. It's no, I mean, I have something that's pretty valuable here that I'm willing to allow you to be a part of too. And so, when we go out and find deals that we think are pretty substantial, I mean, it becomes one of those things of, hey, look, we're offering this and we've already vetted a lot of you to be potential partners, and here's what it is, and if you want to come and do another deal with this, we'd be happy to have you. And if not, that's okay. There's going to be other people that are going to help. They're going to desire to be a part of this too. And so part of the way, I guess, the way you just described it is, there's a mindset shift there of going, look, I have something of value I'm going to be willing to offer.
Yeah.
But the other aspect of that too is that's after you've already taken all the steps. You have an SEC attorney look over things. You're making sure you are in full compliance with everything that you're doing, and that you're able to convey the message of what that deal is, right, and the way you articulate that. And so, what I would also tell you is, I started this. I started raising money long before 2012. I'll put it that way. 2012 was a big change in the market. That's when the Jobs Act was passed. And so that's when crowdfunding became legal to do. Before that, it was handshakes. I got to know you. You got to know me.
Oh.
There's none of this, like, we're going on to, social media and saying, come do my deal. It was, the way that we actually raised money in the past was, no, we really got to have a true relationship here. And let me explain to you what I do. And we built our base one person at a time that way. And so, yeah. And so for the most part, I love it. People will always say, my gosh, it feels like you're an overnight success. I'm like, well, yeah, I guess if 20 years is your overnight success barometer, right? No, we were able to do deals for a long period of time with a lot of people, and it becomes a snowball effect, right? You do well for a few people, and guess what? They're going to tell a few more people, and you're going to be able to grow it that way. And so for me, we don't really market to the masses. We market to the few, because I'd rather have one person who's going to just do every deal with us, and we know we connect well, we work well. They get what they need. We get what we need. I'd rather have that person than go market to 10,000. Right.
Yeah.
So I just don't know if they're going to join us or not. And so it's more of a contrarian point of view probably than what's out there right now, because we actually focus on the individual. We focus smaller, right? We focus, all right, here's what we can do to make sure. And then we want to make sure it's the right investment, So if we get somebody in here who, they don't, all they care about is cash flow. Well, a new development deal may not be an ideal investment for them. And we would say, hey, look, for this probably isn't a good investment for you because it doesn't fit your thesis, right? Of what you're looking for and what you want to do. And that's okay, because we'll have something else down the line that will fit what you do. And I would tell you, our investors appreciate that kind of approach way more than just, hey, we need money from everybody and every deal is just wonderful and great. It's no, let's make sure it's going to work for both of us, right? Because it does me no good if we're in it 6 months and you go, man, I really needed this, and I go, well, that's not what this was, right? So we do a good job of, hey, here's what the deal is, here's what your expectations should be, and on an ongoing basis, this is what it would be as well. So
yeah. And you've mentioned clear communication multiple times in this podcast already, and so it sounds like that's one of the pillars of your capital raising, is just communicating clearly, developing those relationships over time. So on that note, what do you have systems and processes in place for once they are part of the deal? Is there a cadence that you follow for how often you communicate, what you communicate? How do you make sure that the investor feels confident that their deal is moving, and that you're treating their money the way that?
Yeah. So for us, if you're in a deal with us, you're going to get quarterly updates on that deal no matter what. And there is actually a very specific system of what we're reporting on. So it could be, hey, let me give you the overview for the quarter. Let me tell you what's happened with the financials over the quarter. Let me tell you performance-wise what it's looked like. Let me tell you what's going on with distributions. And let me tell you the look ahead. Here's what's going on, or here's what we're going to have focus for the next quarter. That's on every single deal we do. Every single month, we're also sending them another newsletter going, hey, here's what's going on with the company. Here's what we're seeing with things. Here's some opportunities that are coming up. Here's what's going on in the market in general. And the bulk of that content, which is really interesting, of our monthly newsletter actually comes from our investors, meaning they will ask questions throughout the month or throughout whatever it may be. And we answer it in the newsletter. And the reason being is, if somebody has a question, it's more than likely somebody else in the platform has that same question. And it can be from the very specific to the very broad and obscure. I mean, it really runs the gambit. And like an example of that would be, we may have somebody who says, hey, talk about rental rates in the Dallas-Fort Worth market for Q3 for B-class properties in multifamily. Right. That is very specific question, right? They want to know the answer of something very specific. And what we do is we can go to our sources and go, hey, here's what that looks like. And then we cite it, right? So this is from CoStar, this is from, whatever, this is from Yardi, whatever it may be, and go, here's what they're saying this is. So it's not just me saying it. To like some of the more obscure, like we had one a while back, and it was, hey, the Astros are in the World Series. what is the economic impact of that for the city, Houston? When they come play a game, tell me how much money. And there was answers to that. And I laughed because, we have a base of Houston investors.
I'm actually curious about that answer.
I'm sure they'd want to know what that is. And so we literally looked it up and said, hey, when a World Series game is played in Houston, here's the economic impact and here's kind of how it's broken out. And we cited the sources for it. And so it kind of, it runs the gambit is what I'm saying. I mean, obviously we try to keep it very much real estate focused.
So you provide company and market essentially updates monthly, and then deal specific updates quarterly.
Every quarter. And then when something occurs too. So, we're in Houston,
Fire,
Texas. Hurricane comes through, right? I'm going to give you an update. Hey, the property was good, or hey, the property took damage. Here's what's going on. We think we're going to have an insurance claim, or hey, this was, we have $100,000 in damage. Here's what we're going to do to fix it, and here's the timeline associated. So we're going to give them updates associated with it. Or hey, we just had a freeze, guys, that was unlike anything. This
all
property had 12 pipe breaks, and we have 3 units down now so we will give them updates associated with it. And then we'll tell them the wins too. Hey guys, look, we just hit 100% occupancy on this deal, right? It's amazing. We're going to have another push now up at it, and it's in accordance with what we told you about typically in the quarterly. We're going to actually do more rental rates increases or something of that nature. Or hey, you can expect a larger distribution for this next quarter, whatever it may be. So there'll be updates along the way as well.
Got it. So do you do any one-on-ones, any webinars, things where it's interactive, where you're actually speaking with them, or is it mostly kind of text-based communications?
No, absolutely. As a matter of fact, we do a lot of different things with the investors that are, I would say, smaller in nature, more intimate type setting type things, say going out to dinner or whatever it may be, where this is how we continue to cultivate the relationship. We've done things where it's like, you do a happy hour and you invite all the investors, and all of a sudden you'll have 100 people show up. And the reality is I'll talk to, maybe 50% of them, right? And they'll get 30 seconds of my time for that day, right? And so there's not a whole lot of value associated with that. But there is when, we did one just the other day where it was me and 3 other guys, and we were on a boat fishing for 4 hours. And it was, man, we got a lot of things talked about in that. I had lunch with a father-son tandem last week, right? And they're both investors with us, and it was great to just sit down, have lunch, and break bread, and figure out what their expectations were for 25 and what they were going to be looking for. And then we notate all this stuff. So we have a system put together that, hey, I went to lunch, here's what happened, and noting like this is what they're looking for. And so when we do have something, those would pop up and go, hey, this is an opportunity for this person. Let's make sure that they know about it, or follow up with them to see if they have any questions associated with the deal that may be launching.
Nice. Yeah, I'm trying to get better at taking notes on absolutely everything that has to do that occurs around a deal. Anything any interaction you have, any call you make, it's so useful. And I feel like AI will actually improve this eventually. If you get all of this in your system, I'm sure AI eventually will say, hey, this happened, you might want to be thinking about this, yada yada. But that's for another podcast.
No, yeah, and there's CRMs that have that allow you to track all that stuff fairly easily.
Yeah. All right. Well, I just took a peek at the clock. It looks like we have run it down. So it's time to jump into the quick question round. You ready?
Okay.
All right. Starts with education. Could be any form, could be a conference you've gone to, a mentorship program you've been a part of, movie you've seen, book you've read, anything. But I need 2 recommendations, one for general life wisdom and then one for real estate.
Okay. I can tell you last week I was at NMHC. So NMHC is National Multifamily Housing Conference. It's in Las Vegas. It is the mecca for all things multifamily. It's the kickoff for the whole year too. We do a lot of conferences each and every year. I speak at a lot of conferences each and every year. Did another local one here last weekend. But for the masses, right? I would tell you educationally, there's a ton of books. I mean, you're talking real estate. Everybody knows Rich Dad Poor Dad's probably one of the most commonly ones. I like shorter read, Richest Man in Babylon. There's another book, real estate specific. But if you're talking more general knowledge type things, I'm a pretty avid reader. So I would say things like Atomic Habits. by James Clear. And I would say there's a ton of them out there. My gosh, there's so many. It's great.
It's all right. You've already given a good
Collins,
number of them.
Leaders Eat Last, Simon Sinek. I mean, there's a ton of books that are out there. Some other ones that maybe are a little bit different when you're running your own business too. There's a book by Peter Greer called Mission Drift. And it's really interesting because it'll go through kind of and it's actually more of a biblically based book too, but it'll go through more of hey, when these companies started or organizations started, here was their clear mission from the get-go. And it just showed over time how they drifted from the mission and some of the things that impacted that. And so, really getting focused on what you want to do in business is a big deal. And so understanding there are a lot of elements that can help, make you drift from your mission, and being able to stay true to your mission, kind of a big deal, right? And that was a good book associated with that.
Nice. And it's called Mission Drift.
Mission Drift. Yeah.
All right.
By Peter Greer.
That's a good one. I'll have to pick that up.
Yeah.
All right. Next question is for your younger self. Let's go back to the Sam who was just getting started, his first day on the job, doing that underwriting at the bank. Go back to him, look him in the eye, give him one piece of advice moving forward. Yeah.
I mean, stay at it. Because it was one of those things where, I would get discouraged as a younger guy going, man, all I'm doing is this all day, every day, not really realizing, hey, this is an educational opportunity for you. You are learning not just this aspect of it and banking aspect of it, but there are so many other things that you are learning right now. Take
People
it
you're
in.
Meeting.
Really be a sponge and really listen to everything. Take it all in, because that's really what you should be doing at this age. You're 22 years old. You don't know it, bud. You don't know what you don't know. And so literally just listen to everything you can, take it all in, and follow what your training is, because you are going to learn more than you ever realized if you just get at it.
Yeah. So. Yeah, it's hard. It's a hard question to answer, because when you're younger, looking back, I always think like, I always wanted to be to the next step, but that was where you're at when you're younger. That is the step that you need to be at. And you need to be, it's hard to kind of balance that desire to move forward versus, really engaging with where you're at. And so
that's right.
That is good advice.
For provide the staircase to get to the next step, right? I mean, that's really what it is.
Yep. All right. Next question is about the US. It's a big place. There is a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
Believe it or not, as shocking and as self-serving as it is, it's Houston. And the irony is, I think Houston could be one of the strongest markets in 2025. And the reason being is it's chewed through so much of the supply that we've had, and you're now starting to see that imbalance, go the other way. And so we think rental rates are going to start rising here faster than what we anticipated. There's still being a tremendous amount of jobs being created here in Houston, which when you have jobs, you have a need for housing, you have a need for storage, you have a need for everything associated with it. And there's going to continue to be an imbalance the other way. I think it's going to flip faster. And so, from a Sun Belt perspective, I think Houston's going to be one of the strongest ones. Looking outside of the Sun Belt, as ironic as it sounds, Chicago looks pretty amazing, and so does Boston, which are two markets we're not in, and we probably wouldn't go in just because we don't have all the knowledge for it. But from a numbers perspective and a metrics perspective, they're actually really strong with what we're seeing. And so, I would say that out of those three, that's really what it is. As self-serving it is, because we do have assets in Houston. It actually looks like it's poised for some significant growth for this year.
Yeah. So. And Houston is a massive city. I flew into Houston a little while ago. I think it was last year. And I was just blown away at how big that city is. It's like an LA. Well, probably
square miles.
It's crazy. City. And you're actually the first person to ever say Chicago and Boston, actually. Your episode weird, 500 right? Something.
The numbers, the numbers suggest that they're going to have great years.
That's crazy. Huh.
Yeah, and I'm not a fan of Chicago. I like Boston, but if you look at their metrics and their numbers, it's impressive right now.
All right. Well, there you go. All right. Next question is about finding the deal. It all starts with getting in contact with the seller and penning that purchase agreement. So what is your favorite way to generate leads and find new deals?
Yeah, so we have, I mean, we deal with larger properties, and I would just say you got to have the broker relationships to be able to do it when you're buying some of these larger deals. And so it's really more of staying in front of them and continually letting them know, hey, this is where our buy box is. Hey, guys, we're ready to go. Hey, guys, what do you have? Hey, is there anything coming up? And so, because they're constantly staying in front of the sellers, right? And most of us, when we have big projects, we're going to list it with the broker, right? That's just the way our world works. And so, like the NMHC, I mean, it was a sit down with every one of our brokers for the state of Texas. I mean, that's what we did over those few days. And I would tell you, we continually work those relationships so that we know what's going on, in our markets.
So I focus more on like the $1 to $5 million deal range, and for some reason, up until just probably 6-8 months ago, I thought that the only way to get good deals was to do off-market lead gen. And so I had a cold calling team. I was doing mailers, all this stuff. We got deals done, but it wasn't until 8 months ago or so when I just decided to start calling brokers, making relationships. And I'm now a convert. A convert. I mean, brokers are obviously, that's their job to go out there, find deals. But I think, broker relationships, I now understand, are so important. I should have understood this before, but they're out there, they're making the relationships. And so it's so easy. You don't have to hire a cold calling team. Just go out there and have some drinks with some brokers, get them lunch. And it's a lot more fun than hiring a cold calling team to go get.
Well, they want to know you. Frankly, they want to know you, what your parameters are, what your buy box is, because, and the consistency of the follow-up associated with them allows you to be top of mind with them. And so, yeah, I mean, I would tell you in some cases, we're probably pretty annoying to some of our brokers because it's, hey, I know it's been 45 minutes since we left. Has anything else come up, right? I mean, it's okay to get to that point, but you're letting them know, hey, I'm eager. Keep me at top of mind and let me know what's going on. And you'll also begin to find that different brokers, they really specialize in different things as well. And so, you kind of figure out who's doing what, how they're doing it, what they're looking for. And you really just want to be top of mind for that broker when they're about to get something or thinking about getting something, or because, in certain cases, for sure, we'll have a broker approach us and go, hey, I'm supposed to test the market on this deal. They're allowing me to show it to 3 groups only. They just want to, show me who the buyer could be out of these 3. We tell them, hey, we think there's 3 groups. Show it to those 3 only. Don't push it out in the market. And so you want to be top of mind for these guys because there are deals that occur that way.
Yep. Yeah, and brokers will always go back to the person who they know will close. That's their priority, is getting a deal done. And so if you perform with them, you're going to be top of mind. And so that's why it's so important to treat broker relationships well. All right, I'm going to take that and move us on to the next question. This is about lessons learned. Not every deal we get into goes the way we expect it. In fact, most of the time something goes wrong and we get to learn a lesson. So what was a deal that went a little bit sideways for you guys? And then what was the lesson you pulled from it?
Yeah. So, one of the first deals I ever invested in as an LP too, we bought it, and the very next month, we had a major hurricane come through Houston.
Oof.
It went from 100% leased to 12% leased in 1 month.
Jeez.
And at the time, I'm 26, 27 years old going, did I just lose every dollar I just put into this thing? And I got a great education rather quickly of why you have insurance, how you deal with insurance, the things that you need to do to make sure your safety and soundness is in place and life safety items are taken care of, and protecting, your resident base and what you're required to do as a landlord for that resident base. And so it was one of those things. It was scary for several months. But what I will tell you is on the backside of that, it ended up being it was a great and wonderful thing. But, going through that process, wow, that was scary. Wow, we had to have a lot of communication, more so than you would realize. So we knew what was going on, how we were handling it, what we were doing to provide for it, what was going to be needed to be able to get out of this, and the expectations for the timeframes associated with that. And so, You'll never really get a better education than going through something like that to go, all right, I'm going to learn about insurance today. And you start reading through policies and going, man, I may have just taken the broker's word for it and things like that this is what we have, but what does this actually mean now? And you start reading through hundreds of pages of legalese and going, oh, okay, now I have a greater understanding of all this stuff.
Yeah. Yeah, that is it's funny. Like I recently went through my first insurance claim. There was a fire, and you don't, just like you said, you don't realize how important insurance is until you have to go through it. And so it's a really difficult thing. You don't wish it upon somebody, but it is such a good lesson to learn. It's such a good educational experience to have to go through that. It makes your underwriting, your understanding of a deal in the future so much better. So yeah, I mean, difficult time, but you got the lesson, and I'm sure you look at your insurance policies a little bit differently now after you've gone through that experience.
And operationally, right? The things that we do. All right, hey, a storm's coming. Our standard operating procedure, gutters clean, drains cleared out, debris removed, things locked down, right? Laundry rooms closed up. Everything that you do, you go, all right, these are the steps we now take to protect ourselves from further damage that could occur associated with it.
Yep, absolutely. All right, that leads us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
Yeah, so easiest way to find us is to go to our website, which is sunset-capital.com. And if you are actually able to join our platform, you can expect to start getting that monthly newsletter and being in contact with us and having the opportunity to actually have a phone call with me or somebody else on our team. And we can kind of learn a little bit more about you and have the ability to actually see the deals that we're going to be able to offer. So
perfect.
Yeah.
All right. Well, I will put that link in the show notes. So if you guys want to reach out to Sam, all you got to do is just click the little more in the description. It'll pull down that full description in there. You can find his link. All right, man. That wraps it up. Thank you very much for hopping on. All right. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great day. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.